Welcome back to the Investing Talk podcast. Today, we're diving into Take-Two Interactive Software. The company's listed under the ticker symbol TTWO, and their stock has been making headlines with some pretty impressive moves lately. Now, a lot of this buzz is tied to their upcoming game releases. We're talking potential blockbusters here, folks, games that could shake up the entire gaming world. So the question is Take-Two poised to be a winning investment?
Well, it's exciting to see that Take-Two isn't just riding a wave of hype. They're backing it up with solid release dates for some seriously anticipated games.
Let's break it down, shall we? Starting with the behemoth in the room, Grand Theft Auto VI, or as most gamers know it, GTA. This release is slated for fall 2025, and the anticipation is palpable. I mean, some analysts are even predicting that this game could rake in $1 billion. Yeah, you heard that right. $1 billion just from pre-orders on the first day alone.
That's a testament to the power of these long-standing franchises and the incredible dedication of their fan bases. Take-Two is playing it smart, not just by releasing a new GTA, but also by breathing new life into other beloved series.
They're certainly not holding back. Sid Meier's Civilization VII is set to hit the shelves on February 11th, 2025. And Mafia: The Old Country is coming in summer 2025. Oh, and there's more. Borderlands 4 is expected by the end of 2025. And for all you Lord of the Rings fans out there, Tales of the Shire A. The Lord of the Rings game is arriving on March 25th, 2025. That's 5 major titles in a single year.
Talk about a bold strategy. But when you look at the broader gaming landscape, it makes sense. The gaming world is in constant flux, and Take-Two is clearly aiming to be a major player by offering a diverse range of games that cater to a wide variety of gamers.
And from an investor standpoint, this is where things get really interesting. These major announcements are already having a noticeable impact on Take-Two's financial performance.
Absolutely. Take-Two recently reported a net loss in their Q3 report for fiscal year 2025. But here's the thing. The numbers were actually better than what analysts were expecting, and that led to a nice little jump in their stock price. What's even more telling is their projected net bookings for the whole fiscal year. It's estimated to be somewhere between $5.5 and $5.65 billion. That shows a lot of confidence in their upcoming releases.
And it's not just the company feeling optimistic. Analysts have been upgrading Take-Two stock left and right, increasing their price targets. It seems like everyone's eager to jump on the Take-Two bandwagon right now. But as with any investment, there are risks to consider.
True. The gaming industry is notorious for its volatility. What's hot today might be old news tomorrow. The competition is fierce, and there's always the chance of delays or unforeseen issues during game development. These are factors investors need to carefully weigh.
Now, before we get ahead of ourselves, let's see what the technical indicators tell us about Take-Two's stock.
Well, the good news is that the stock is currently trading above both its 50-day and 200-day moving averages. This is generally seen as a bullish signal, indicating a strong upward momentum. However, we also need to factor in the Relative Strength Index, or RSI. Right now, it's hovering around 70, which suggests that the stock might be approaching overbought territory, something investors should definitely keep an eye on.
So we've got these blockbuster games in the pipeline, positive financial performance, and some mixed signals from the technical indicators. What does it all mean for potential investors? Is Take-Two a buy, a hold, or a pass? That's the million-dollar question, isn't it?
Well, the answer, like most things in investing, isn't a simple one. It really depends on your individual risk tolerance, your investment goals, and your overall assessment of the company's long-term potential. There's no denying that Take-Two has a lot going for it: a powerhouse lineup of games, strong financials, and a history of success.
But we can't ignore those potential risks we talked about.
Precisely. The gaming landscape is constantly evolving. New competitors can emerge out of nowhere, and even the most established franchises can struggle if they don't innovate or keep pace with changing player preferences.
So should investors jump on the Take-Two bandwagon or proceed with caution? What are your thoughts on that?
What I find particularly interesting is that Take-Two is making a bold move. They're releasing major titles across a variety of genres. If this strategy pays off, it could be incredibly rewarding. But it also raises an important question.
What happens if some of these highly anticipated releases don't live up to the hype?
Exactly. The success of this strategy hinges on the quality of these upcoming games and how well they resonate with players. If they deliver, Take-Two could see its stock price climb even higher.
But if they stumble even with just 1 or 2 key titles, it could have a ripple effect throughout the entire company, impacting investor confidence and potentially leading to a correction in the stock price.
This is precisely why it's so important for investors to do their due diligence, go beyond the headlines, and look at both the potential upsides and downsides.
Absolutely. Before making any investment decisions, I strongly encourage you to take a closer look at Take-Two's financials, their management team, their upcoming games, and the overall competitive landscape. While the potential rewards are definitely enticing, it's crucial to be aware of the risks involved. And don't forget to subscribe to the Investing Talk podcast. Share this episode with your friends and fellow investors. And be sure to leave a comment below with your thoughts on Take-Two and the future of the gaming industry. We love hearing from you.
We'll be back with part 2 of our deep dive into Take-Two Interactive Software. We'll be delving deeper into their competitive landscape, analyzing their strengths and weaknesses, and exploring some potential scenarios for the future of this dynamic company. Welcome back to Investing Talk podcast.
We're continuing our analysis of Take-Two Interactive Software.
In this segment, we're going to delve a bit deeper into Take-Two's position in the gaming market.
Yeah, understanding the context is really key,
Yeah.
when it comes to making those smart investment decisions.
Absolutely. So let's take a closer look at this competitive landscape where Take-Two operates.
I mean, it's a cutthroat industry, right? With some major players all vying for a slice of that gaming pie.
Oh, absolutely. You've got titans like Activision, Blizzard, and Electronic Arts, and let's not forget the rising influence of these mobile gaming companies.
It's a constant battle for market share and for capturing the attention of gamers worldwide.
So where does Take-Two fit into all of this? What are their strengths? What are their weaknesses?
Well, one of Take-Two's most valuable assets is their impressive collection of iconic franchises.
We're talking Grand Theft Auto, Red Dead Redemption, NBA, 2K Borderlands, the list goes on and on.
And these games aren't just popular, they're cultural phenomena, with millions of devoted fans across the globe.
Absolutely, and that gives Take-Two a significant advantage when it comes to brand recognition and customer loyalty.
They've built a reputation for creating these high-quality, immersive gaming experiences that keep players coming back for more.
Another strength is their strategic focus on developing games for those core gamers.
Right. Those are the players who are truly dedicated.
Exactly. They're deeply invested in gaming and willing to spend both time and money on it.
And this segment of the market is known for their willingness to shell out for premium titles and all that enticing in-game content.
Which, of course, translates into some pretty substantial revenue for companies like Take-Two.
It's a smart move on their part.
Take-Two has also been wise to diversify their portfolio beyond just console and PC games.
Oh yeah, their acquisition of the mobile game developer Zynga a couple years back was a major move.
Huge. It gave them a solid foothold in that rapidly expanding mobile gaming market.
And that allows them to reach a much broader audience and generate revenue from multiple streams.
It's all about staying ahead of the curve, adapting to the ever-changing dynamics of the gaming industry.
For sure. But let's be real, no company is perfect. Take-Two definitely has its weaknesses as well.
True. One concern is their reliance on a relatively small number of successful franchises.
Right. Even though those franchises are incredibly popular.
Hugely popular.
It also represents a concentration of risk.
It does. If one of these flagship titles were to underperform, it could have a pretty significant impact on the company's overall performance.
There's always a chance a new competitor could come along with a groundbreaking game that steals some of that market share.
Or that player preferences could shift away from these established franchises.
The gaming world is unpredictable.
It really is another challenge for Take-Two, is the rising cost of developing these AA games.
These games are becoming increasingly complex and visually impressive, which requires larger budgets and longer development times.
Absolutely, and this puts pressure on Take-Two to deliver hits with every single release, because the financial stakes are higher than ever.
It's a high-pressure environment, and we can't overlook the risk of delays either.
Right. Game development is a notoriously complex process. It can be prone to all sorts of unexpected setbacks.
And a delayed release can not only disappoint those eager fans, but it can also impact revenue projections and stock performance.
Exactly so. While Take-Two has a lot of positive factors working in their favor, investors need to be mindful of these potential downsides as well.
It's all about weighing those risks and rewards carefully, making informed decisions based on your own individual investment goals and risk tolerance.
Now let's shift our focus to the future. What are some potential scenarios for Take-Two?
Let's explore some possibilities.
All right, first let's consider that best-case scenario.
The dream scenario.
Everything goes perfectly. Their upcoming releases are all smash hits.
Grand Theft Auto VI breaks all sales records.
Right?
Civilization VII revitalizes the strategy genre, and their other titles exceed all expectations.
In this scenario, Take-Two's stock price goes through the roof. They become the undisputed king of the gaming industry.
And investors who got in early are reaping the rewards.
It's the dream outcome.
But let's be realistic here.
The gaming industry is anything but predictable.
Right, so let's consider a more moderate scenario.
A more grounded outlook.
Yeah, Take-Two's upcoming releases do well, others maybe not so much.
The competition heats up. New players enter the market. And consumer tastes evolve.
In this scenario, Take-Two's growth is steady but not explosive.
Their stock price might fluctuate a bit, but overall they remain a solid investment.
Okay, so a more balanced outlook.
And then, of course, we have to acknowledge the possibility of a less favorable outcome.
The dreaded worst-case scenario.
Delays plague their major releases. Bugs and glitches tarnish their reputation.
A key franchise flops, and a new competitor emerges with a game-changing title that completely overshadows Take-Two.
In this scenario, Take-Two's stock price takes a hit. Investors start to lose confidence.
Ouch. It's a stark reminder that even the most successful companies aren't immune to market forces and unexpected challenges.
Exactly. So how do we make sense of all these potential scenarios? How do we as investors navigate this uncertainty?
Well, that's where due diligence comes into play.
It's not just about getting caught up in the hype or the headlines.
Right, it's about digging deeper, understanding the fundamentals of the company, analyzing their financial performance, their management team, their game development pipeline, and their overall competitive position.
It's about asking those tough questions and seeking out diverse perspectives.
Because investing shouldn't be a gamble. It's about making those calculated decisions based on solid research and thorough analysis.
Precisely. And remember, the future is never certain.
Right. These scenarios we've discussed are just possibilities, not predictions.
The gaming industry is in a state of perpetual change, and Take-Two is a dynamic company.
Their success ultimately depends on their ability to adapt to those market shifts, to innovate their games and create those compelling experiences that resonate with players worldwide.
Stay tuned for the final part of our look into Take-Two Interactive Software.
We'll be wrapping up our analysis and offering some key takeaways for you, our valued investors.
We'll also share some valuable tips and strategies for evaluating gaming stocks in general,
so you can confidently assess whether Take-Two or any other company in this exciting sector aligns with your investment portfolio. Welcome back to the Investing Talk podcast.
We're wrapping up our deep dive into Take-Two Interactive Software.
We've covered a lot of ground, haven't we?
We have, from their highly anticipated game releases to their financial performance and that competitive landscape. We've weighed the potential risks and rewards of investing in Take-Two.
So now it's time to distill all that information into those key takeaways, the insights that you, our listeners, can use to make those smart investment decisions.
Let's start with the big picture. Take-Two is a major player in this global video game industry.
They have a proven track record, an impressive portfolio of those popular franchises, and a very talented team of developers.
And their upcoming releases, especially Grand Theft Auto VI, have generated a ton of excitement among investors.
Analysts are predicting record-breaking sales and a potential surge in stock price.
But we can't forget that the gaming industry is known for its cycles and fierce competition.
Gamer preferences can change on a dime. New technologies can disrupt the entire market, and rivals are always fighting for that top spot.
Absolutely. Take-Two's success will depend on their ability to adapt to these challenges, to keep innovating, and to consistently deliver those high-quality gaming experiences that players crave.
Speaking of adapting, let's touch on their financials. Take-Two has actually been performing quite well despite some recent obstacles.
They have. Their revenue and earnings have been growing, and they have a solid financial foundation.
But that reliance on a few hit franchises does pose a risk.
It does. If any of those franchises were to falter, it could significantly impact their bottom line.
So what's the verdict? Is Take-Two a smart investment?
Like with any investment, it really comes down to your individual risk tolerance, your investment goals, and your overall assessment of the company's potential.
If you're looking for a high-growth stock with the possibility of those big returns, Take-Two is definitely worth a look.
But be ready for some volatility. The gaming industry can be unpredictable.
So before we wrap up, let's talk about some tips for evaluating gaming stocks in general. Whether you're interested in Take-Two or any other company in this space, it's so important to do your research.
Here are a few things to keep in mind.
First, look at the company's track record. Has they consistently released successful games? Do they have a strong lineup of upcoming titles?
Then delve into those financials. Are their revenues and earnings trending upward? Is their balance sheet healthy?
Next, assess that competitive landscape. Who are their main rivals? What are their strengths and weaknesses?
And don't underestimate the overall health of the gaming industry. Is it expanding or contracting? Are there any emerging trends or technologies that could disrupt the market?
By considering all of these factors, you can make those informed investment decisions.
And remember, investing is a marathon, not a sprint.
It's about building a diversified portfolio that aligns with your financial goals.
We hope this episode has provided you with some valuable insights into the world of gaming stocks.
We encourage you to continue tuning in to Investing Talk Podcast for more in-depth analysis and expert advice.
As always, don't forget to subscribe to our channel, share this episode with your friends, and leave us a comment with your thoughts.
Until next time, happy investing.